Well, good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up, and this wrap-up is for Wednesday, the 25th of June, 2025. Another event. Let me give you what's happening. The market has now moved on from the NATO meeting, from the 12-day war between Israel and Iran, to the temporary peace. Hopefully it's a longer-lasting peace between those two warring countries, to now already starting to think about, what about those tariffs? Where are we? If you don't believe me, all you had to do is listen to the two-day testimony of Fed Chair Powell. He said, how can we make a move when we don't know what the tariffs are or the impact that they're causing? So he'll find out what they are, but he won't know the impact of them for a while, because the president said that we'd get those tariffs within 2 weeks. Well, he's either back in the States or flying back. He doesn't have to be here to know that. He's got his crew with him. He's got communication. What are the tariffs going to be? The second phase that we have to deal with, of course, is the U.S. budget and his big tax plan. And as you know, the House has said that they're waiting to receive from the Senate now the Senate's version. It appears that you're dealing with babysitting issues, you're dealing with Medicare issues, you're going to deal with the SALT issues, and a couple of other areas, specifically the debt ceiling limit. But once those get known and they move, then the reconciliation begins, and then the market can say eventually, it's beyond tariffs, it's beyond the big mega tax bill. Where are we? That is the big issue. So that's where I think you're at right now. So everything else that happened since Saturday night is an event that threw the charts a bit crazy, but the market that got through that the best was artificial intelligence. Today, NVIDIA, all-time high price. I mean, that's very impressive. Backing off a little bit on Amazon and Netflix. Netflix got just about what we were talking. The first resistance area I looked for was 1,200. That certainly worked out. Then I said, you're probably going to go from there in $50 increments, maybe to $1,250. When we got there, I said maybe to 1,300 level. This needs to consolidate at some point. I'm not bearish, but you're getting to the point where I think that people are looking at it and they're wondering, should they take some money out of the market? Tesla. If you're paying attention to what's going on in these early rides, you're seeing there are websites that show it, and it's all the things you would expect. The car stopping at wrong addresses, dropping off people. One attempt, I understand, was in the middle of an intersection. The phantom braking has been a problem, where the car sees a shadow and thinks it's a person and starts braking to not hit that. That's a known problem that it's had. This is all to be expected, and you work through that. I don't know why the phantom braking hasn't been fixed in this long period of time. That was an issue well before they went to the autonomous driving. As you can see, Uber today down another 75 cents. But remember, it's added tremendously since Waymo said that they were opening up in Atlanta. You've got uranium sitting here just shy of the $40 level. I've got Uber in there twice. I didn't realize that. I'll have to get rid of that. Home Depot finding a bit of a base, which I think can benefit over time if RH, which we'll cover in a minute here, can find its footing here. And a lot of that's going to depend if interest rates start declining. Labor market, even if the Fed says it's weakening, by any standard you look at, it is strong. Now, we get a heck of a lot of data tomorrow. At 7:30, you got four things happening. Chicago Federal Reserve May National Activity Index, the final look at the first quarter GDP number, that's the final, Advanced Durable Goods Report, and jobless claims. At 7:45, you've got Richmond Fed Barkin speaking. The only reason I mention is these Fed speakers have surprised us with three of them coming out saying, let's go in July for a rate cut. That's the only reason I'm really pointing that out. At 9, we get the National Association of Realtors U.S. pending home sales. So that's an important number. EIA Natural Gas Storage Report at 9:30. At 10 o'clock, the Kansas City Fed will report the Manufacturing Composite and Business Activity Index. And Micron, they were looking for, I think, $1.61 in earnings. They got $1.90. So that's not just a beat. That's a monster, 20% better than what the market was looking for. So it's kicked that stock up. I don't know where it's at this exact moment, but it's done very well with it. So why don't we go take a look at what the markets are doing and get our feet wet? I see sideways action in restoration hardware, and that's what I'm picking up right there. The market still has the pattern of lower highs and lower lows, which is bearish. The market, when I look at the 18-day average of closes, you can see it's just sitting here. You can actually turn this market a bit friendly by getting over 188.70. If that happens, you start lifting the market potentially with the pattern of higher lows, higher highs against the 18-day average, which could give you a kicker back up to the 194.60 level, the upper Bollinger Band. So I'm looking at all that and going, is this market trying to base out? What is it doing in that sideways action? And in terms of momentum, you have a market that's got readings that are oversold. So it's easier for me to get bullish than bearish with this setup. Are we there yet? We are not. Do I think we're at a breakout point? I do not. I think you got more work to do in that sideways action, period. When we come to MP, today I was wondering, were you going to lose the embedded reading by a closing under 79? You did not lose it, but it's hanging on by the skin of its teeth. Very, very interesting. It is pulled back. It needs to give you the bounce now if it's going to be good. Another down day will do that market in. Then we could be going back to wherever the 18-day average is. It would not surprise me. In Broadcom, new high for this particular leg of the move. And I'm saying to you, it's the software companies. Everything with the AI is still very much on the move. Google has come off the lows back to the 18-day average, just not ready to do anything. Is it through on the downside is the better question, and I can't answer that. It's still in a downtrend. On this pattern, this is the resistance. You're at the combination of the 200-day and the 18-day average in a downtrend with a market that is corrected its oversold condition. So not friendly there. Netflix made its run for the high. It's over the Bollinger Band. It generally pulls back into it, and it's overbought. I think the pros are taking money off the table here, cutting positions down now. Robinhood, the Stablecoin Act and the way things are going, the way the Fed is talking about stablecoins, I think this is all a big positive. So you've got to pay attention to that. In Tesla, that rally off the Sunday release of the cabs has all been given back. And I would have expected that. It was nice to get it, but now the market's got to restructure. It's still overbought. I don't see anything there that I'm excited with. Obviously, in stocks, you hear me how I'm talking about everything in the AI is still on a move. You're overbought? No. You got an embedded reading. You're making a run for the upper band. You are not in overbought territory yet. In the financial services, you went from the lower Bollinger Band right up to the upper. Now, the Fed is making a play to reduce some of the capital requirements to allow the very large banks, I'm talking the JP Morgans, I'm talking Goldman, banks of that size, where they're going to reduce the amount of capital they have to have, and they can do more treasury bill buying. They want more liquidity in the treasury market. This is one way to get it. So it's very interesting what's happening, and that's helping this market also. In XLI, the industrials, you've got a lower low, higher high. Here's that sideways action, very much in the sideways action arena. What's it doing here? It's trying to figure out its next move. Is it going to have enough strength to break out to the upside or downside? That's what it's working on right now. On XLE, well, as energy prices came down, this energy part of the sector, the refineries, the service companies and so on, they get hit with that because now you're back to that zone of $65, $66 in crude where we were worried that the big boys weren't going to develop new wells. At 75, they probably would. $80, I would think they are. Not here. Now, when I say develop, they've got wells that can produce more. You know the technology's been phenomenal with this fracking. When you come to gold, I don't see anything bullish on this at this point. I see a market with lower highs, lower lows. It petered out before the ceasefire that was declared between Israel and Iran. In silver, I'm beginning to smell a bottom again. And I say that because I think the industrial metals can get a play. if interest rate cuts start happening in the market, and if we know what these tariffs are or aren't, where are we with it? You have to get back over now, right here, this 3305 level. You got to 3301 and you closed at the day's high. But if you get over that, you negate the pattern of lower highs, lower lows, and so far you're holding the 18-day average and working off an overbought condition. So I think you're in the thralls of trying to establish a trading bottom. I need proof that it has occurred. In the copper market, I think that a move now over the highs of Tuesday, not today, Wednesday, Tuesday, could set off a buying spree that carries the market back to the upper Bollinger Band as long as this tightness at the London Metal Exchange goes on. And you got to just go LME News and you'll understand what I'm saying. BND getting a bid again. Can the Fed start cutting rates? If they do, this market, in theory, goes higher and higher as that occurs. It obviously got over the 200-day average at the Bollinger Band. This often is a spot where you get a stall in those markets as a technician. In the dollar, are we going to break through everything and be able to get under 27.10 and just start making the lower and lows? Even if you do, you don't have a chart pattern. You have a higher high and lower and low, and you're oversold in the market, whereas you're overbought in FXC, but at least it's in an uptrend, and it keeps hitting the upper Bollinger Band. It could go for what I call the gorilla glue trade, where you latch on to this band, you force the stochastics to embed, and you start moving up, which would tie in with me thinking that the U.S. dollar could in the futures be on the verge of a breakout to the downside. And I covered that tonight, and if you go to our website for that. So another thing I do in the mornings, as you know, is I start off the first thing. 6 in the morning, I'm recording a futures video for my traders. And then at 9, I hit the SPDR ETF. I like to let the first half hour of the market open in SPDR stocks and ETFs to get the money that's been trading in aftermarket, get blended in, and finish up so many of these reports. By 9, on average, most of the key reports are done. You still get something like you saw Kansas City at 10. But I cover 40 charts, very specific. Buy here, sell there, tracking the trades that I'm saying to do, developing with you right then and there how that trade is working out. So if you like something like that, an idea that maybe throws ideas at you, and by the way, all my subscribers can write me, and I do respond to them. Sometimes I create a miniature video for them on a stock they have in mind if I'm not covering it already, and that's part of your subscription. So just go to iraepstein.com research. There's icons up here. Give them a click. I'm Ira. I'll catch up with one and all in the morning. You take care.